Welcome back to another video on how to trade supply and demand and how you can actually draw your zones so you can be able to do this on your own. Now, if you guys didn't know, on my Twitter, every single day I post trade ideas that go over my zones so people can look at them, see how I made them, and then look how they ended up. So before we start, this video is going to be broken into two parts. One is me going over zones we had and how we were able to play them, and then number two, how to actually draw the zones. Now stick around for the entire video because I have a surprise halfway through the video they're gonna have to wait to see. So without further ado, let's get right into it. Alright guys, so here we have an example of a trade idea I put out a few days ago. So here you guys can see everyone loves these ideas. So look at this. We had a QQQ trade idea, a rejection off this level, and a bounce off this level. Unless my zones are met, there is no entry for me. There is no trade unless my zones are met. This is one of the things that really makes me like zones, is because it gives you a plan to follow. Unless your zones hit, there is no trade. And the reason why I say that is because I see a lot of people chasing moves like this or chasing moves like this and then just getting completely clobbered. Instead, I draw out my zones, and unless they touch, there is no trade for me. And I make sure I teach you guys that as well in my tweets. Now, going further into it, here is the results. QQQ trade idea update. Right off the open here, we took short, caught this wick down, and you guys can see that over here, and you guys can see everyone in the chat is getting on fire. And then when it broke and retested, this was my entry for a long position, and you guys could see that's where we took 25% and the members banking. Now, I'm not here to show you my Discord. You can't join if you want to, so before you click off the video, just know this video is about teaching you guys and everything about that. We caught it on voice. That's how I trade them. It hits my zone, I'll take the short without even thinking twice. Without thinking twice, I'll take it because this is what I know. I play puts at a supply zone. If it breaks above and I get stopped out, I'll look for a pullback to re-add, and I'll make my money back on the long side. And for this here, I shorted here, sold down here, added long here when it broke out, and then caught a nice move up. So I caught it two ways, and now you guys can see people are making money. Here's another trade idea I posted. Was a rejection of this supply, and then calls if it breaks above and uses this as demand. You guys can see we caught money on the put side before, and then you could see you caught money on the put side, and then when it broke past, retested, it continued, and this day it went to 415. So you guys could see how these plays work out. So we could have caught puts here, sold, and then it breaks above, retests, and goes long. So there you could play the zones two different times. So that's pretty much what I was going over. And then here on Tesla, same thing. So I drew this zone out yesterday, and you guys could see this was a demand zone, but if it broke under, I would use that as supply and short down. Now that's where we get into the good stuff. It opened under, retested that demand zone, boom, almost a 40 something point drop from that demand turned supply. Now, if you guys want to know how you can find these zones with pinpoint accuracy, you guys want to learn more, stick around for the rest of the video. If you guys haven't already, make sure you guys drop a like and comment what you expect to learn from this video. So by the end of the video, I want to see if those questions get answered. If they don't, I'll make a part 2. Alright guys, so now we're going to be hopping into how you actually draw the zones. But before we get started or go into the next part of the video, I want to announce my mastermind to you guys. So first link in the description is going to be my one-on-one mastermind, my mentorship, where I'm going to teach you guys tips and tricks that I don't, really have time to give out to anyone else. So link is down there. You can apply to join. Not everyone will be accepted. There is a application process to see if you get accepted. So make sure you guys go take that application. I don't want to guarantee that you'll get in, but go take it anyways, see if you get accepted. We're going to be having a full month of straight rigorous work and classes and education, and the schedule and all the plans are laid out. This is not for beginners. This is for people who have been trading, who know what they're doing, you know what an option is. I'm not teaching you guys the basic stuff. This is stuff that you need to get to the next level. Say you're making $50 to $100 a day. This is to help you try and get to that $500 to $1,000 level, or just the next level, just because I know how hard that can be in trading, and I needed someone, a mentor myself, before I really reached the next level. So that's what I'm trying to do here. Make sure you guys check out that link. And then, yeah, there's two main things you look for. You want to see aggressive moves. You want to see an aggressive move to the downside, followed by a very quick recovery to the upside for a demand zone, right? So this would be considered a demand zone where the stock rushes down, pulls up really fast. You want to look for a sharp move. Now that's the main thing that you're looking for. Sometimes it might consolidate and then make a sharp move, which is what we saw here, a sharp move. So those are two ways I like to draw my zones. All right. Now on Tesla, what did we see here? And I like to draw them on the 15 and 30 minute charts. Now on Tesla, what do you see here? For me, I see consolidation. I see market makers agreeing that the price is settled here. And then I see buyers take over. I see market orders. I see market makers take this level and then push it higher aggressively. Now that is telling me that market makers want to have buy orders sitting here. And the analogy I use over and over again is, okay, you have a paint roller. Consider the market like you're painting a wall. All right? You're painting a wall. What are you doing? You grab your paint roller, you move it up really fast, right? You're just going like this, and then you move it up really fast. What happens to the paint? It's going to leave spots. It's going to leave gaps, just like trading. It's consolidating and moves up really fast. What does it leave? It leaves orders. What do you do to fill in those paints? You bring it back down, you fill in that gap, and then you continue painting wherever you were. Just like the market's going to come back, fill those orders, and then continue the way it was going. Like it almost touched here and then it went. So we could have drawn this zone a little higher and it would have worked out better. But overall, you guys get the gist, right? Then here it broke through. We used demand as supply and it continued down. Just like support becomes resistance, right? Demand turns into supply when it's broken through. That's just how it works. That's how it's always been. I've done a video deep into the zone flips and how you can use those in a past video, so go check that out if you guys want to learn the psychology behind them. Now, what I want to go over is, what do demand zones consist of? Demand zones consist of buyers. You want to see institutional buyers. This is institutional trading. So on stocks like SPY, this was another zone I had marked yesterday, going into today, and you can see huge sell-off followed by a huge recovery. This was drawn here. Huge sell-off followed by an insane recovery, a very sharp move. Do you think retailers are making this move? You think people like me, you, and all the thousands of people that watch this video, we put all our money together, multiplied it by 10x, we'll never be able to even print a green candle just based off our buying. This is all algorithms and all institutions. And the way they trade is through limit orders, right? So over here, this is how you can spot them. Look for areas on the chart where the stock price aggressively moves, where you know it's impossible that retailers like me and you are going to be able to make that sort of move happen. Here's one. Huge sell followed by a very nice wick followed by a V-shaped recovery. There is buy orders here. This is what I know. You can see here, we retested it here, sold off. You think it's a coincidence? Do you think it is a coincidence that the market bottomed out right at our demand zone? No. What it is buy orders sitting at this level because the price moved so fast. They used the paint roller too fast and it came back, filled those areas, and continued painting in the direction they were painting. I hope that makes sense for you guys, because it makes a lot. That's really opened my eyes to this stuff. And you guys see that it bounces perfectly. In order to learn supply and demand, you need to understand the psychology behind the market. Each candle represents emotions. It represents buyers and sellers. But more so, this represents fear, right? And this represents greed. There's so much fear. It's coming into buy orders. People are scared to buy here, right? People are scared. You're going to see this aggressive sell-off while you're trading. You're not going to be thinking about buying. You're going to be thinking, oh, it's going to break this demand. I'm going to reshort, because you're scared to pull the trigger here. That's why with supply and demand, there's different ways to trade it. And if you guys haven't watched my video on how to execute supply and demand, go watch that as well, because that'll teach you how to trade this without fear. Now, when it comes down to drawing zones, this is how I like to do it. So what I'm going to do is I'm going to go back to a random point in time on SPY where I don't even know, just to prove you guys this point. I'm going to go here. Okay, it didn't let me, but just choose a random spot. We'll go somewhere like here. First things first, who made this move? Institutions. The way I like to draw my supply and demand zones, before the first imbalance candle, before the first candle where it moves, and these are called imbalances, where the market isn't balanced. This is a balanced market. This is an imbalanced market, where it's a huge green candle or a huge red candle. I like to find the candle right before, draw it from the wick to the body of that candle. This here is my demand. And what I'm going to do here is I'm just going to extend it right. So eventually I feel like price will come here, price will either bounce from this level, or price will break through, use it as resistance, and continue down. One or the other. Those are two scenarios I have for this demand, right? And up here, before an aggressive sell-off down, I'm going to draw my supply like this. Price should realistically come up here and reject, or break above, pull back, and continue higher. Two scenarios, right? So what I'm gonna do is I'm gonna hit the play speed, and you guys notice I draw this on the 15 minute. This is a random point in time. I don't even know what month we're in. This is July, so this is about a month ago. So I'm gonna play. First things first, what do you see? You see a rejection. You see a rejection, you see a candle close, right? So we had the first scenario where it rejected 437 down to 436.82, right? Around $1 moved. So you guys can see here we broke past, right? $1 move to the downside. That would have been 20% on 0DT's minimum. It breaks above, retests, and these candles look very, very small just because we're zoomed out so much. But you can see this is a nice rejection. 437.68 down to 436.80. This is almost $1 move, 20% here. It moves higher. The candle moves higher. You see it pull back. This is a long entry, right? And you'll see this zone later gets invalidated once, you know, it starts chopping around, so we can delete that zone, right? What I'm more focused on is I want to see how the market reacted when it pulled back to this demand zone. So we're gonna replay it here, we're gonna go here, and we're gonna replay it right here, and tell me if this is a coincidence or maybe that whatever madness I'm telling you guys actually works. So the price is currently moving down, huge sell-off, gaps down. Tell me this is a coincidence. Tell me that this is a coincidence where almost a month from that level, this demand where it previously moved so far off of, right, where we said there's buy orders sitting and the market will want to come back down and fill those orders because they have to repaint the gaps they left, like the paint roller analogy. It makes almost a $20 move on SPY in the matter of one day. Is that a coincidence? No, I'm showing you guys this real time. I drew out the zones in front of you. I replayed to a random time. I couldn't have even staged that, and this is what's happening. You guys will see this stuff really works. And don't just look at me. Don't just, you know, take my word for it. Go back into your charts and see how this stuff really works for you. And from that level there, the price really moved almost $30. That's crazy, right? Go back into your charts. I want you guys to look, draw these zones out for yourself and see how the market reacts at those levels. And you guys will see here, right? Before this huge sell-off, right? Before this huge sell-off, we take the wick down to the body. We draw our supply before this huge sell-off happened where the market pushed up, found those sell orders, and continued down. Where does the market reject? Where does it reject? It rejects exactly at the zone we made. It's stuff like this gets me excited. It makes me happy seeing this stuff work, and especially when you go back and back test it, it shows you, hey, these things work. These things work, right? So I want you guys to go back and look at this stuff. Look, you draw out the supply here. There's still sell orders sitting because the price moves so aggressively past that level, comes back up, retests, and continue down. It really is that simple. Now, instead of trying to trade all this stuff in between, you just wait for this setup to come. Once it comes to you, you get a nice play. You just wait for this level to come, and once it comes, you get a nice play. It's very simple. And look at where it starts rejecting again. It's like clockwork. You know, it starts to reject. Look. Perfectly rejects. Now, what I want you guys to understand is every time a supply or demand gets touched like this multiple different times, right, and it keeps hitting those orders, is it getting weaker or stronger? It's getting weaker because the orders that are staying there are constantly getting hit, are constantly getting filled. Just like support and resistance, if it hits a level too much, it starts to weaken because those orders are getting filled. So when after this is the second time it touches zone, you want to play fresh zones. So this would have been your high confidence setup. This would have been your high confidence setup. This over here, if you're trying to long this, is a lower confidence because it already touched the zone here. This is a lower confidence since it already touched the zone here and filled those orders. So you usually want to try catching a supply or demand the first time it gets touched, or the first time it's about to get tested, because that's when you know there's still orders sitting there and it's a strong level. So that's one example I just showed you guys. And if you guys want to see more examples of this stuff working, if you still don't believe me, go look at my Twitter. So here you guys can see on my Twitter, I posted this demand zone on Apple, and I gave this supply zone. I said this zone is a lower confidence zone, right? And look, this guy was asking for a video. You're getting the video. Here's a zone. It's a lower confidence because this is a better risk to reward area, right? And this, the price moved way more aggressive than over here. So here's the contracts I called out, and the result is, you guys can see here, pulls back, nice move from that demand zone to that top right there. Contracts went over 500%. And this is updated every single day on my Twitter. You guys could go back and look. I post all this stuff for free. I show you guys, and you can see here, I started shorting QQQ here. I gave the QQQ short zone here, right? I shorted here when the price got there, and you could see here, up 5%, 50%, out of QQQ at 50%. There it is. I do this stuff for real. I show you guys my entries. I show you guys my exits. I show you guys the play before it even happens, and people are going to say it still doesn't work. And here's the proof. I scrolled back to a random time, showed you guys. If you guys still don't believe this, go back onto your charts, back test, back test, back test. I'm going to be making a part 2 on this video, but as for the video is almost over. You guys have to understand all this stuff. Go back and rewatch this. Comment any questions you guys have, and make sure you drop a like. If you guys enjoyed this video, make sure you guys drop a like. Make sure you guys drop any questions you have. Subscribe. We're so close to 10K subscribers, and I'll see you guys tomorrow. Peace.